Hi fellow traders, I'm going to explain a sell trade setup on Canadian dollar versus Japanese yen. After a significant gain following Bank of Canada rate statement, if you see this gain was majorly caused by uh, what was said by Mr. Pelosi in the rate statement of Bank of Canada. So after this significant gain, Canadian dollar was supposed to retrace. This is very natural, and generally market takes a little correction after any fast gain or any significant gain. So Canadian dollar already tried to retrace down. If you look at this small down move and that small down move, but it didn't succeed, and it kept going to the upside because of overwhelming buying pressure in Canadian dollar. So all we needed was a triggering factor for retracement, and today we got the triggering factor in form of what Bank of Canada's Deputy Governor Mr. Timothy Lane said. Many news agencies have already taken the particular line from his speech, and that line read, Bank of Canada's Lane says the Governing Council did not mull the merits of an insurance cut ahead of the December 4th announcement. This news is not necessarily saying that there will be a rate cut, but as of now, we have not to think about the rate cut or no rate cut. As of now, this created a mild negative sentiment, and this caused Canadian dollar to retrace to the downside, and it really worked as a triggering factor. But before we believe on a triggering factor, we'll have to measure the strength of the triggering factor, and also we'll have to correlate it with technical scenario. So if you look at this candle, and this candle was caused by the triggering factor, which I talked about, and this candle is an engulfing bearish candle. Not only this candle was alone a reason for my sell trade, but also next candle was a bearish candle of almost same size, which shows that the triggering factor is really working, and the speed of fall in the Canadian dollar is same as it was in the previous candle. So after this, if we look at the previous low, because when we look at the uptrend or downtrend, we look for higher highs, higher lows kind of thing. So previously Canadian dollar was making higher high, like high, higher high, higher high, low, higher low, but this time it made a lower low below this level. So I have taken my sell position right here at 82.49, and I am targeting 50. There are other many fundamental factors which is supporting the idea of downward retracement. One is OPEC meeting. Following OPEC meeting today, majority of analysts are expecting no significant rise in crude oil anytime soon. And you already know that the Canadian dollar and crude oil are correlated. Also, if we look at the trade balance released today from Canada, trade balance data was 0.3 billion better than forecast, but revision in previous release was 0.2 billion worse, which made this data insignificant for any further gains in Canadian dollar. So this is about the Canadian dollar. Now let's talk about Japanese yen. Why I chose Japanese yen? Why did I not choose USD or CHF this time? Recent poor economic data from the US increased probability of poor NFP. As everybody knows, that there is big correlation between ADP NFP and NFP. So if we look at the ADP NFP came to be significantly poor than forecast, and also ISM non-manufacturing was slightly less than forecast, and the long running saga of US-China trade deal is also now creating some trouble for USD JPY. There are mixed news coming from White House about US-China trade deal. Trump said something else, Ross said something else. Once we hear that Trump is going to expect a trade deal with China after election. Then we hear something from the Ross that we are still close, very close to the trade deal with China. So this mixed data coming from the White House is causing uncertainty, and professional and institutional traders, hedge fund managers sell during uncertainty. In case of such global tension and uncertainty, people sell risk currencies and they buy safe haven currency. And you already know that Canadian dollar is risk currency and Japanese yen is safe haven currency. So that's why I have chosen to sell Canadian dollar versus Japanese yen this time. And I'm targeting this 50% retracement level. You can add 1 pip plus spread in your in this level. This is 82.13, so you can roughly set your take profit around 82.17, depends on your spread. So this is about the entry, fundamental factors, currency correlation, and the target. Now let's talk about exiting position in case of loss. We should not place any stop loss because I am not expecting market to suddenly start moving to the upside. Instead of placing stop loss, we should be waiting for non-farm payroll. So if we get lucky and get our target hit before release of non-farm payroll, then we have nothing to worry about. But if the target is not hit before non-farm payroll, then we'll have two ways of exiting the position in case of profit or in case of loss, both. Before NFP, if you have your position running in some floating profit, you can set your stop loss to the break even, which again is not very advisable strategy, but it is the strategy for those people who don't want to risk anything if they have already the running profit. Why I said that this is not very advisable? Because of the spike caused by NFP. Sometimes you will see that the spike took your stop loss and then market moved in your favor, and then you will start regretting that you should not have closed your position. So it is completely your choice whether you want to set a stop loss at the break-even point, or you want to exit the position as per the outcome of NFP. Now let's talk about the outcome of NFP and the decision accordingly. NFP release will have a high chance of revision in previous actual. So if NFP is gonna come weaker, it will cause a fall in USD JPY, and this correlation of CAD JPY and odd JPY is going to cause even bigger fall in CAD JPY. This is what I have seen. When USD JPY falls, CAD JPY falls together with bigger speed, provided that there should not be any economic factor from crude oil or Canada at that time. And we tomorrow I think there is no economic factor from Canada, so it will be behaving normally as per the correlation. So then we don't have to worry about our sell position. Second thing, if NFP comes negative, wait for the revision in previous actual. If revision is way more positive than the negative deviation of actual release, then it is positive for dollar. But if the NFP is positive but still revision is way more negative, then it's bad for dollar. So basically what we have to do is we have to compare the deviation of actual release from forecast, and if there is revision, then we have to compare this with the difference between revision and previous actual, and then we have to understand what is actually happening in the market after this NFP release. So if USD JPY will fall, CAD JPY will fall, and if USD JPY will rise, CAD JPY will rise too. So if the final conclusion after comparison of actual release and revision is saying that the USD gonna go up, close the position in the loss, and if it says that USD is gonna go down, just hold on to the position. CAD JPY will also go down. So that's all about this sell trade setup of CAD JPY. Let's see what happens until the release of CAD JPY. I'll keep updating in the text. There is an option of updating the trade here in a trading view. So I'll keep doing that. I always do this for all the analysis, because I trade exactly as per what I post here, and I keep my followers updated. Thank you for watching.